Hello, ladies and gentlemen. Welcome back to another edition of Capital Concepts. I am Jeff Schuler. I'm the Director of Research at Spiker Consulting here in Deerfield Beach, Florida. Well, I just got off the phone with an elderly gentleman, and it made me want to talk about something that is very near and dear to my heart, and that is capital preservation and why I believe so strongly in gold. Right now, our economy is in deep trouble. And you know me by now, I've said this plenty of times. The banks are not what we think they are. They're having deep systemic issues. They're not reporting their earnings properly. We are seeing banks fail at a record pace. The FDIC's got no money. They've got to ask for more money. They've got a letter of credit they've got to work on. We've got foreclosures at a record pace. That's not stopping. Unemployment is at 9.8% from government statistics, up to 17, 18%. When it's all told, all in, that's not stopping. The small business owner is stuck between a rock and a hard place, and they are the backbone of our economy. But I was talking to this gentleman about why I have certain people in gold. And yes, we want to make money. Everybody wants to make money. But wealthy individuals and retirees care about one thing more than anything else, and that's capital preservation. What's the safest thing you can do with your money? Let's put it in gold. Not a bank account, gold. Not paper money that is just an IOU backed by IOUs. Real money, gold. You buy it straight out, you put it to the side, you keep it, and that's it. It ensures everything that you do. Now, why is gold a good place to put your money right now? Well, for one thing, from an insurance standpoint, it's the only place that you can protect your portfolio, period. And it will protect the rest of your portfolio. 5 to 35% of your assets in precious metals, primarily in gold, will protect the rest of your portfolio. Can you make double-digit returns on it? Absolutely. But if things get real hairy, if we have to go back to a gold standard, you're looking at many multiples on where gold is right now, and the only thing that will protect you from an absolute devaluation of the dollar, I mean a significant devaluation of the dollar, is having that portion of your portfolio in gold. Not ETFs, not mutual funds, not mining stocks, bullion, actual metal itself. Now, there's one thing right now that's underpinning the market, and I just finished part 2 of what I call the China syndrome. Now go to www.spikermetalnews.com. You can see part 1 and part 2. And in part 2, I talk about what the Chinese are doing, that they are not only the world's leading producer of gold, and that's just what they tell us they're doing, but they're also the world's largest buyer of gold. And the interesting thing is, from a bullion standpoint, there's 2 ways that gold is bought on a large scale. One, are on the metals markets. That's where they buy the stamped gold. It's got the Credit Suisse stamp on it. It's got the serial numbers on it. It's done through a broker dealership, and it's registered. Everybody knows about it. But most gold is traded off market, and that's where China does the plethora, the most of where it invests in gold. And that's not reported. We don't know the true level of those transactions, and it's my knowledge, it's my understanding, it's my information that China is buying tremendous amounts of gold. So is Dubai, but I'm sticking to China for right now. China has made public statements that pretty much it's going to buy any excess liquidity out there. Some people have called it the China put. And what that means to me is that any pullback at all in gold is going to be taken care of. There's a floor under gold prices right now, and it's going to be there for the foreseeable future. It is also my contention that China will back the yuan with gold, and that'll force every other major currency to do the same thing. In the Arab nations, really out of Dubai, where they now have a wonderful metals exchange, they're looking to put together a currency called the Khaliji. It means of the Gulf, and it's going to be backed by gold, silver, and oil. They've been working on that for a couple of years, and it looks like 2010 is going to be the time period. It's going to be the time it comes out. When you have a major economic force go from a fiat currency, that is just a paper currency with no backing, to a gold standard or a hard asset standard using things like oil, all other currencies must follow suit. Now, Robert Kiyosaki, I mentioned this before, on a video he did about a year or so ago, said if that happens, and this was before this recent spate of $1 trillion of printing of money, gold would go to 6,000, 7,000 if we had to do that. So now I figure that number is up to about 7,000 or 8,000. Are those pie in the sky numbers? Yeah, they are. But you know what? It's possible. And if that's possible, isn't it prudent, doesn't it behoove you to take a portion of your assets for safety's sake and put them in there? Put them in gold. Not derivatives, not futures, nothing risky, just plain old-fashioned gold. Simple as that. Now, why should a person that's retired do that? They're not going to get income from it. No. But what they will do, they'll get peace of mind, and they'll protect their buying power. Because the most important thing when a person retires is protecting their buying power. And there's 3 levels of retirement. And it's something I explained to this gentleman. One is the newly retired. You just retired. Yeah, you did a great job. For 40 years or 50 years you worked and worked and worked. And now you're in your late 50s, you're in your 60s, maybe early 70s, and you're facing upwards of 20 or 25 years of having to make your investments work for you to maintain you in some semblance of the lifestyle that you've become accustomed to. Well, if you put a portion of your money in gold, you're able to do that. If you are what I call mid-level retirement, and that is, figure out the 70s, late 60s and the 70s, you've got about another 10 or 15 years what you're looking at, and you're at the point where big growth isn't important, but you need to have some, and again, you've got to protect your assets. Then you've got late-level retirement. Now, other people, you're in your late 80s, maybe in your 90s, and let's face it, you're just, right now, enjoying life, doing the best that you can, and making a bunch of money is not important to you. But you may be leaving this to somebody else, a loved one or loved ones. You want to make sure that what you're leaving them is worth what you started off with. That's where it comes in again. What you do and how you do it really depends upon your station in life and what is important to your overall situation. Again, if you're younger, yeah, there's that growth. You want the big returns. The older you get, the more conservative. The wealthier you are, the more conservative. The great thing about gold right now is you can not only get all that protection of your principal, you can get some pretty significant returns as well. And we've enjoyed those. Over the last 7 or 8 years, gold has outperformed every other asset class since the year 2000 by a dramatic margin. The only ones that come close are silver and platinum. Imagine that. Now, China. People say, and this is important, because people are going to say to you, well, China owns so much of our debt they can't afford to see us go down. They own $2 trillion of our treasuries. That's true. But China doesn't think like we do. They don't think in short terms. They don't think in months and years. They think in decades and centuries. $2 trillion is going to be a down payment to them. They want to be the world's most important and leading economy. That's what they're on the road to do. People say, well, the IMF's not going to let them go gold-backed because that's what the IMF was set up to do. Well, again, if you think that the Chinese really care or are going to put the IMF and other countries' needs and feelings in front of the needs of their citizens and their future, I think you're sadly mistaken. Do not underestimate the Chinese or what they're trying to accomplish. The bottom line is this. They're making gold safer, even safer than it normally is, and more imperative than it's ever been. Read, do yourself a favor. Get a hold of, go to the website's right there, and the phone number's right there. So call us and see that, and go to the website, go to Spiker Metal News, click over, the icon's right there, and read the China Syndrome. Got part 1, part 2, part 3 is coming up. I think personally, I wrote it, so I think it's very important. But the bottom line is this. If you want to make money, but more importantly, if you want to protect your assets, regardless of your stage in life, that's what gold is for. Now, ladies and gentlemen, I hope you enjoyed this segment of Capital Concepts. Have an absolutely fantastic day. And until we meet again, may God bless you all.